Good morning, kind people of YouTube. Another day, another video, and today I just want to take a quick look at the markets and at a few news stories that caught my interest today. So let's just start. Let's take a look at CoinMarketCap, and we see an ocean of green once again, with some coins showing gains in the double digits. We see Dash up 21%, IOTA 14%, Monero 10%, and pretty much everything is green. How far do we have to go to find something? Here. Number 47 is down. And aside from that, only Tether, of course, you can never really pay attention to Tether. Tether is meant to be a dollar. But aside from that, everything is up. Bitcoin up 3%, Ethereum up 2.9, Ripple 4, Bitcoin Cash 3.5, EOS 3.8. It's looking beautiful. Most importantly, take a look at this Bitcoin price. Just look at it. We are so close. We are so close to 7,000, to that massive mental barrier. I believe once we've broken through 7,000, and look at this price development, it's looking like we're about to break through it. I think once we've gone through that, it should be smooth sailing for a while, and we should be in for further gains. Because once we have broken through 7,000 and established a price above that, 7,000 will be the resistance going down instead of the resistance going up. And that gives us a whole lot of additional safety in the market, in the prices. So that is looking very, very good. We've seen it consistently go up for about 5 days, and now we're so close to hitting 7,000. We just broke through the 6,600 barrier a couple days ago. Now we broke through the 6.8 barrier and the 6.9. And 6.85, I believe, was also one. So that is just beautiful to see. I'm very excited today. Now, market cap is at 225 billion. Just yesterday, I think it was 217 billion. This is the highest it has been in 3 weeks. And right now, it's showing no signs of stopping and looks to be continuing up higher. Bitcoin dominance has fallen slightly, with altcoins making bigger gains than Bitcoin to 53%. Still over 50% though, so it's still a very Bitcoin dominated market right now. Let's take a look at some articles. First of all, Bitcoin Price Watch. This is from a couple hours ago, I believe, when the price was still slightly lower. Bitcoin US dollar primed to gain above $7,000, pretty much saying the same thing I'm saying. Bitcoin price made a nice upside move and broke the 675 and 6775 resistance levels against the US dollar. There's a crucial bullish trend line in place with support at 678. The pair is currently consolidating gains, and it looks set for more gains above 7,000 in the near term. Bitcoin price analysis. Yesterday, we discussed a possible break above 675 with euro in Bitcoin price against the US dollar. The Bitcoin US dollar pair did trade higher, and buyers succeeded in clearing the 6750 and 6775 resistance levels. The price even broke the 6850 level to move into a bullish zone. A new weekly high was formed at 6957, and the price is currently placed well above the 100-hour simply moving average. Recently, the price corrected lower below the 69 level, but as we know, since then it has corrected, it has gone back up. It tested the Fib retracement level of the last wave. However, downsides were limited, and the price was well bid near the 6850, 6860 zone. Below this, the next major support is near the 68 level. More importantly, there's a crucial bullish trend line in place with a support at 6780 on the hourly chart. The same trend line coincides with the 50% Fib retracement level of the last wave from the 6567 low to 6957 high. Therefore, if the price corrects lower from the current levels, it is likely to find support near 68. So far, if we took a closer look, the 1-day price, we see it trading well above that. We see it actually having found support above 6.9 consistently for the last about 5 hours. So that is very, very nice to see. It is outperforming the already rather bullish analysts. Looking at the chart, the current price action is positive above 6850 for Bitcoin. It seems like the price is preparing for more gains above 7,000 and 7,050 in the short term. Major support level 6.8, major resistance level 7. I think they might be slightly off here. I think the support level might actually be 6.9 at the moment. But like I said in many other videos, I am not an analyst. I am not applying mathematical systems here. I'm going by watching the market and knowing the news, trying to gauge the interest and the sentiment. Next up, some very positive opinions about Bitcoin that I think have some merit, but let's take a closer look. According to some financial experts, Bitcoin transaction fees are lower. In addition, Bitcoin bypasses the unnecessary and expensive financial institutions within which credit cards depend. Therefore, experts believe that Bitcoin's advantages will encourage merchants to replace credit cards with Bitcoin. Now, they're going to be quoting a few people here, and they're all very big on Bitcoin. And I think they're making relatively valid points, but those same points could be made about pretty much any other cryptocurrency and better about many of them. So let's take a look. High credit card fees continue to be borne by merchants and ultimately by consumers. Indeed, merchants pay billions of dollars to have issuers process card transactions. As somebody who has been on the back end of these transactions and has seen the fees, I can tell you this is absolutely true. The regular rates are somewhere between 2 and 3% per transaction, which of course get reflected in prices because merchants have to pay those. And sometimes, if you're unlucky, if you're dealing with international banking and everything, it can go even higher. The idea of replacing credit cards with Bitcoin is gaining steam among financial experts. For example, I'm not going to pronounce this name, professor and chair of the Department of Economics at Long Island University Post in New York, forecasts that increasing competition in the retail sector and Bitcoin's offer of lower transaction fees could induce merchants to replace credit cards with the cryptocurrency. Indeed, most of the fees charged by credit card issuers can be avoided using the cryptocurrency. To strengthen the point, he quotes Ian DeMartino, who writes in his book, The Bitcoin Guidebook, How to Obtain, Invest, and Spend the World's First Decentralized Cryptocurrency. From a merchant perspective, Bitcoin has the advantage of not having large fees from credit card companies that cut into profits. And DeMartino describes how credit cards erode merchants' profits. Credit card companies typically charge between 3 to 4% for each transaction, a fee that merchants normally take on themselves. For merchants with small profit margins, that fee could up half or more of their profits for each credit card transaction. I think he's exaggerating the fees a tiny bit, because typically what I've seen is 2 to 3, not 3 to 4%. It's a minor exaggeration, but he's doing it to make Bitcoin look better in comparison. It's still an exaggeration from everything I know. This is precisely one of the issues that Bitcoin's creator intended to address by making Bitcoin payments analogous to cash transactions. Satoshi highlighted this significant feature of the cryptocurrency in the seminal white paper Bitcoin, a peer-to-peer electronic cash system. A purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Bitcoin is faster, cheaper, and safer, they say. In addition to the unreasonably high transaction costs imposed by credit card issuers, the threat of credit card users becoming a victim of fraud continues to rise. They're showing statistics of credit card fraud. There's a lot of it going on. Now, credit card issuers are validating the advantages of using digital currencies for payments, and some of them are taking action. For example, on August 21st, MasterCard obtained a patent from the US Patent and Trademark Office for a method to increase the speed of cryptocurrency transactions. Now, all the things this article is saying are true. Bitcoin is potentially a better alternative to credit card payments. The fees are lower, the speeds are potentially faster. Here's the problem. Pretty much every other major cryptocurrency, especially ones like Ethereum, Ripple, Bitcoin Cash, are faster, cheaper, and at least as secure as Bitcoin. So while Bitcoin is in many ways better than credit cards, the problem is there are still many things that are better than Bitcoin. So yes, Bitcoin is better, but there's other things that are still better. So this is the complete omission of any mention of any altcoin, of any other cryptocurrency, makes it painfully obvious that they don't have an argument to counter that with here. They know other cryptocurrencies are technically better at this stuff, and they just don't want to say it. Which, yeah. And even then, this is all assuming the best case scenario. We have seen what happens to Bitcoin when a lot is going on in the system. We have seen exorbitant fees. We have seen transactions take weeks when the blockchain was backed up. And as long as issues like that persist on the Bitcoin network, it won't be able to replace credit cards. And as of this point, we have other cryptocurrencies with better solutions that don't seem to get backed up, that don't seem to ever take that long. So All of this is technically true, but I think it's a misrepresentation, and I think it leaves out better alternatives on purpose. And it's very telling. It's very telling because they know about those other cryptocurrencies, they know about their advantages, and if they had an actual argument against them, if they could make a clear argument for why Bitcoin is the one that should take over instead of them, why Bitcoin is the one that is the best alternative to credit cards, they would be making it here. That could be one quick paragraph if it was a clear-cut argument, but it evidently is not. This is very telling in my opinion. Next up, JP Morgan CIO, blockchain will replace existing technology. Now, Laurie Bear said at a press conference in Buenos Aires that blockchain will replace existing technology in a few years. We will see a greater and wider use of blockchain in a few years. Blockchain will replace the existing technology. Today it only coexists. Bear explained to Crypto247, that is a website, that JP Morgan uses blockchain technology to simplify the payment process and to store consumers' information related to Know Your Customer policy. She added that blockchain technology helps to prevent money laundering. Bear further explained the use of blockchain technology by the bank. We are currently following many paths. We invented a blockchain with an open code based on Ethereum. Actual blockchain technology has not yet resolved issues with privacy and scalability that we need. We are connected to Hyperledger and Enterprise Ethereum Alliance. The application of this technology in business is more important to us than the technology itself. We are not only looking for cost reduction, but also for opportunities to develop new products. So this is cautiously optimistic. She's essentially, I think this is a woman. I hope this is a woman. They are saying essentially that the technology is extremely promising, but that it still needs to be developed a bit further until it can resolve issues with privacy and scalability to the level that are needed for a major bank. But JP Morgan is clearly very invested in this. They have patents. Here is an example. In May, JP Morgan Chase filed a patent for a blockchain-powered peer-to-peer payments network that could be used for intra- and interbank settlements. The patent application proposes using a distributed ledger to process payments in real time without having to rely on a trusted third party to hold the true golden copy. So, cautiously optimistic, but still this is a massive bank saying blockchain is good. And here we also have the CEO, Jamie Dimon. JP Morgan is testing blockchain and will use it for a whole lot of things. I'm excited to hear more details out of JP Morgan. We've been hearing bits and pieces here and there. I'm sure they will have a lot more to announce later this year and next year. Now next up, Samsung. Another massive corporation. You know me by now if you've been watching my videos. You know that I'm always excited about any kind of mainstream adoption, any kind of partnership with a big company, any big company looking into these technologies. Samsung SDS, a subsidiary of South Korea's tech conglomerate, has developed a blockchain-based certification platform for South Korean banks, it announced Monday. So very similar technology to what JP Morgan was talking about right now. Developed in collaboration with the Korea Federation of Banks, a new platform called BankSign is set to make interactions between different banks' mobile systems seamless. Users can carry out transactions on different apps, but the system will require verification from only one app, using passwords, fingerprints, or patterns for authentication, news agency Yonhap reported. Samsung representatives said the system security ensured by connecting bank systems into the data sharing network, and the certification data within this network can remain valid for up to 3 years. According to a statement, the security is bolstered by the inherent immutability of blockchain, meaning, of course, once something is written into the blockchain, it is there, it is clear, everyone has a copy, it can't be fucked with, it can't be changed. The statement added, BankSign is the first application of the much-anticipated blockchain technology on banking services. The company will continue to expand its digital transformation business, which will bolster competitiveness of banks and financial institutions. So, very exciting news. This could be something big. This is the application of blockchain to international banking, to quick monetary transfers, to seamless transfers, to secure transfers that we've been waiting for. And it's nice to see a company as huge as Samsung looking into this actively. And last but not least, Roger Ver, who is a big Bitcoin Cash proponent, is saying it is the best from an investment standpoint. Let's take a look at this article. For the better part of a decade, Bitcoin has sat at the forefront of the cryptocurrency industry, continually proving itself that it is a reliable project to invest your time and money in. But for proponents of Bitcoin Cash, the crypto that spawned out of August 2017's hard fork for the Bitcoin chain, BCH reigns supreme. It goes without saying that Roger Ver, dubbed Bitcoin Jesus by some, has quickly become the controversial poster child of Bitcoin Cash. Ver recently spoke with the host of Fast Money to discuss his opinions on the cryptocurrency market, specifically Bitcoin Cash. Commencing his time on the segment, he first pointed out the fact that Bitcoin has become unusable as a form of digital cash. Elaborating on his ideology, he stated, "Bitcoin is no longer, or at least last December wasn't, usable as commerce at all. The fees became high, the transactions became slow and unreliable, and people like myself and everybody else that was trying to use it for commerce stopped and switched to something else," I think this is supposed to say. Now, this is something I was just mentioning earlier in this video. We have seen this multiple times when the system was just completely overloaded. Nothing was moving, and of course that makes Bitcoin unusable for that time. And that has happened multiple times now. Now, Bitcoin Cash is supposed to be a solution to this. So let's see what else he has to say. Seemingly expressing his positive sentiment regarding Bitcoin Cash, he added that this something else could be Bitcoin Cash for the most number of people. However, as critics constantly point out, Bitcoin Cash has underperformed Bitcoin greatly this year, with the relative value falling by over 50% from 0.1834 Bitcoin to 0.08 Bitcoin. Regardless, Bitcoin Jesus went on to note that Bitcoin Cash's dismal performance should not be a cause of concern for BCH diehards. Now, this is clearly a biased article. You can tell from the choice of words. Referencing his over 6 years of experience in the ever-so-volatile cryptosphere, the outspoken Bitcoin Cash advocate noted that he first invested in Bitcoin at approximately $1 and saw his investment grow 30-fold in 2011's bubble. Following this astronomical run, Bitcoin fell by over 90% back to $2, which turned his 30-time gain into just twice. Likening investment to the good old game of hockey, Burr pointed out that players, or in this case investors or traders, should head to where the puck is going to be rather than where it is. Which is pretty much what I've been saying. Look at the projects, look at their potential future, don't look at the prices now. Explaining why Bitcoin Cash is where the puck is heading, Burr noted that all the adoption, merchants and business are being built on top of Bitcoin Cash at this point, so in the future I think Bitcoin Cash is the best from an investment standpoint. Burr may be a Bitcoin Cash proponent, but he says to diversify. Aiming to stay relatively unbiased, the foremost Bitcoin Cash proponent added that investors should never keep all their eggs in one basket, in cryptocurrencies or in publicly traded vehicles alike. CNBC host Melissa Lee, seeming intrigued by the statement, went on to question Burr about his overall cryptocurrency portfolio. Staying true to what he preached about diversification, he noted, "I hold more Bitcoin Cash than anything else, but I have some Ether, Zcash, Zcoin, Dash, Monero, and I still hold Bitcoin as well. So a little bit of everything is a good idea, including a bit of Ripple and Stellar. Diversify, diversify, diversify is the name of the game." Later, reverting to his Bitcoin Cash-centric mindset, Burr added that he began to diversify his 99% Bitcoin portfolio 2 to 3 years back when he saw the writing on the wall that Bitcoin developers had, I'm so sorry, I'm really messing up today. That Bitcoin developers had what he called an insane idea. Oh my god, to leave blocks small. Damn. I'm just all over the place once again today. But whatever you think about his Bitcoin Cash position, he's obviously very, very bullish on it. And personally, from the research I have done on Bitcoin and Bitcoin Cash, I believe it is the technically superior project. I don't know if that will result in mainstream adoption or that it is the best project on the market, just that in direct comparison to Bitcoin, I believe it is the better technological project. Now, that does not mean it will go higher than anything else. That does not mean it will outperform Bitcoin, and even if it does outperform Bitcoin, that does not mean it will outperform other coins. But I think we can all get on board with this statement from him, at least his main sentiment: diversify, diversify, diversify. Never put all of your eggs in one basket. Be careful, take some risks every now and then, but make sure to get into a lot of projects that have a hopeful future, that have good products, that have collaborations, that have adoption, and don't just put all your money into one crypto. That is going to be the video today. Thank you so much for watching, and I will see you guys soon.